And we're going to go to Jesus' question. He says, Michael, we're still on a confirmed uptrend. How to determine when to use bullish or bearish vertical spreads using the market sentiment tool. Okay, Ernie and I had a discussion about this last week. Many times I talk about my targets for when I'll change modes or not enter a spread, a bullish bull put credit spread on the triggers of this. And my triggers are essentially, let's go to the history. My triggers are, yes, we've had a lot of sell warnings here. We've been hitting new highs. Naturally, you expect that. We've had some easing for 2 days in a row, and then we went up again. So we've gotten the sell warning. It's pushing those upper limits, as you can see, and we're just the sell warning. My general rule of thumb, when I'm going to start worrying about protecting calendar call spreads, maybe closing some of my bull puts for a profit, is when I see two or three of these strong bearish sells in a row amidst the sell warnings. I'm still looking to open bull put credit spreads on Monday. I had my 3 expire worthless, which you see that portfolio, the 3 expire worthless today for the full profit for the bull put credit spreads that were opened the previous Monday or 2 Mondays ago. But so I am on a cycle, and I'm planning on opening positions honestly for bull put spreads. Now, that being said, Jesus, if something happens over the weekend, I usually don't plan on thinking about entering these trades until about 2:30 p.m. Eastern time on Monday. I don't open them during the morning because so much activity is going on. You're trying to catch midpoints. I don't bother with that. I wait till the mid-afternoon. In any case, if something comes out over the weekend and the markets fall 2 or 3% and there's some bad news, then yes, that's another reason why I wait till 2 o'clock to just hesitate and go on. If the market's still kind of trending up, even if there's a little easing and the market pulls down a little bit on Monday, we'll go back to neutral, and I still think I'd be opening bullish spreads at this time. Now, let's go back in time. See, this is one where I stopped, October 9th. Now, we were at 30, it went up to 35, 34, and it didn't really drop as much. I think the lowest a couple weeks later on 10/27 was at 33.90. 32.71, I'm sorry. No, it did hit 32.69. I apologize. So 2 to 3 weeks in October, it went down on a bearish run. I didn't open positions in these cycles. I can't remember what my cycle was. It the 9th? No, it would have been the 12th. My apologies. The 12th to the 26th. I didn't open bull put spreads at that time. And then when we hit the 26th, I didn't open spreads at that time, 10/26, my bull put credit spreads, which would be 2 weeks out. Why? Because that went to November 6th, and I didn't want to have bull put credit spreads out over the election. Turns out I missed out on profits. I was conservative. I didn't want to take the chance that whatever happened with the outcome of the election would cause the market to pull back or react volatilely. Not a great position to be in bull put credit spreads. Didn't happen exactly like that at all. And so I missed out on some potential bull put profits. But again, that's the only other time I missed a cycle. When I see 2 or 3 of those in a row, this was the bigger one back here in August. So what was that pointing to? That was pointing to that decline in September. I had positions open here. They expired the next week. And then I decided not to open positions from that first cycle when it started to dip down and it went down. And then we got the light buy here. So I started opening new positions on that Monday, 9/28. And that took us to 10. No, that took us to this point. Yeah, so I had positions expiring here, thankfully, before this really started to trigger. And then I paused opening on 10/13. I'm sorry, that's what it was. I paused on 10/13. Yeah. And then I did one cycle in there after it went back to neutral. My apologies. So I didn't open on 10/13. I did open on 10/20 because that's why they were expiring before the election day. But I didn't open on 10/26 because of the election. So that's what I look for, okay? The sell warning right now, even though we've seen a lot of them, because the market's been pushing the top, and what's being triggered as the bearish ones, put call volume ratio, okay? Stocks hitting their new 52-week high low. That makes sense, right? Jesus, it's pushing the upper barriers. SPX number days over the SMA 20. The gap over the SMA 100 and the number of stocks, the percentage of stocks over their SMA 100. When that gets very high, that points to a bearish indicator. We're close here on this other SPX one in the MACD gap, of course. Trend's not there. VIX is going back a little bit to normal. Stocks of the SMA 20 almost triggered bearish, believe it, as you can see here. So they're getting pretty close to going into that strong more sell warning. But if we have an easing on Monday, some of these bearish will ease off. We might go back to just 3 to 11, meaning 3 bears to 11 neutrals. I apologize. 3 to 10. 3 to 10 there, Jesus, for the 13 indicators. Okay. All right. Mike, how are you doing on completing the new learning piece on bull put spreads? Just about there. And I've got a whole nother thing that I'm working on, of course, and putting together for next week also, in relation to that, which is why Alberto's question was so good, and as was William's follow-up question was very good. And of course, Jerry's question related to that also about the married puts for the blueprint. So, but the bull put's coming really close, Kipp, provided there's no other issues. Well, there's no issues on that, but provided there's no other hiccups along the line as far as recording goes, which I had a little while ago. All right, so I'll keep you up to date on that, Kipp. I'd expect to see some more information on that. Let's see here. I can't. It's okay. So anyway, Fernando asked a question a while ago. He says, "Hey, Mike, can you explain the CBOE-SKEW index and how it can be useful?" I can't. Honestly, I'm not familiar with it. I'll tell you that right now. Here's just what it's showing. If you go back to the overview, it says the skewness of a rate of return indicates returns around 0. Negative skewness entails CBOE-SKEW estimates the skewness of the S&P 500 returns at the end of a 30-day horizon. Is similar to VIX. The price of the S&P tail risk is calculated from the price of the S&P 500 out of the money option. Skew typically ranges from 100 to 150. P500 tail risk is calculated from the price of the out of the money options. So I'm assuming it's looking for a skew or a smile. Is what I'm guessing here. I could be wrong on this. I'm just going to throw it out there. So meaning the skew of the volatility across the market based on out of the money options, or the out of the money options have a higher implied volatility, a skew, or a smile, as they might say, if it's different, with the out of the money options as compared to the in the money. Maybe what it's looking at here, and it says the 100 to 150. So it just, it's been staying in this range. It looks like it was out of bounds here. 109. Oh no, it is 106. Here, September 2018. Okay, so here's August. Okay, August, the skew is very high at 145. They say it stays between 100 and 150. So I think if it's high, that means that you can expect a downturn like we saw in September. Oh, I'm in 2018. I'm sorry. No, that's true too. Because remember what happened that disastrous October and November of 2018. It started to drip low. So when it hits a bottom here, maybe that means it's bullish and it's about to recover. If the skew is up near 150, maybe that's bearish. So here we are in August 2020. The skew is up, Fernando. And then we saw that September decline. It started to pull back. Bottom, I'm sorry, it's hard to get there. There it is. October 2020 was very low because we also declined in October, and it moved back up. How would you, I don't know exactly how you'd read this, but what I think you could, how this, the full definition, the best definition of this. But what I would look for in this case, Fernando, is to just go back into the chart here for this, the skew index, and then pull up another chart of SPY on top of it and see how just the markets perform, SPY or QQQ. My assumption is that when you get up to these 140, 150 ranges, that usually means the market's topping out and will probably start to decline. And then when you get to the bottom, that's usually, it was December 24th was the bottom in 2018, if I'm not mistaken. December 26th, actually, was the bottom of the market in 2018. So maybe when you hit there, you expect it to start going back up. And if you get up to that 140 range that they're talking about, near 150, it's jumpy. I apologize. December 20th, 2019, that might mean it's time for decay. It'll pull back in that case, okay? So let's just go back there. What I say is PY. So let's go back to where we were in February. Let's see where we were on that on February 2020 versus March. Here we go. November, I'm not in 2020. Okay, June, July. Maybe I'm opposite. Oh, no, there it is. Okay, so down at the bottom here, March 16th, March 20th, when it was down at that low near 100. Let me try to get there again. 115, not near 100, but that was at the bottom. Okay, so I guess that's what they're saying with this skew, is that if it's up near the 150 range, this was in February, December, and in February it was coming back up again, not really high, but close to 140. Maybe it hit there at one point, and then we saw that decline. Okay, and then the other times we saw here too, you could talk about, that August and September of 2018, right before the end of the year, when you had that horrible October, a hiccup November, and that disastrous December to the end of 2018, Fernando. So that's what it's looking at, is my guess. I think they're looking at out-of-the-money options and comparing the implied volatilities of the out-of-the-money options, Fernando. And then again, like they mentioned, if it's up near 150, that looks like it's partial indicator, trailing indicator of a market pullback. And when it's down near 100, that means maybe the market's bottomed and it's about to come up as well. Okay, so that's what I guess they're showing. That's what I guess that skew shows for us there in that case. Okay, all right. Well, I don't see any other questions that have come in. We are at 5:41 p.m. Eastern Time, ladies and gentlemen. If you do have any last-minute questions, go ahead and you can send those in as well here. We might start just wrapping up, though, unless any new last questions come in. I want to remind everyone, of course, while we're here, that today's material are my thoughts on your questions, designed for educational purposes, increasing investing performance, and options knowledge. Any stocks or options discussed today should not be taken as direct recommendations or direct trading suggestions. Options involve risk, as we've seen, and may not be suitable for all investors. Again, if you like some of the tools you saw, we walked through the search on the married put screen for Alberto, but as I mentioned, we support 23 of the different commonly used option strategies. So the same features you could use in the search tool for the married put to screen specifically for options, returns, implied volatility, volume, percent volume, and much more for the options. And of course, for the stock criteria, technicals and fundamentals that we saw, it's available for all 23 strategies, with, of course, the links to further research and analyze the positions, signature tools for stock repair or insurance, plus the portfolio tools for tracking and managing your positions. To test that out for 14 days, just go to PowerOpt.com. Just put in your name and email address to get full access to the site. After that, the subscription level started at only $45 per month. But we do have other data plans. If you want delayed data, it's just $65 per month for access to all of the tools with the delayed data. We do, of course, offer a full backtesting, the historical suite of tools as well, with data going back several years. That's only $100 per month. That gives you everything in the 20-minute delayed for $35 more, full access to the history. Of course, we do offer a real-time service as well. On all subscription levels, you can have those free coaching sessions. Of course, you can upgrade at any time as well. Other free information, we had mentioned about the webinars. You can just go to powerop.com/webinars.asp. That is a public page, although the top 5 or so newest webinars in each section, option strategies, options concepts, requested topics are blocked out only for subscribers to Power Options, okay, in that case. And I'm sorry, so you can access that at any time. Also, as we mentioned, you can just go to YouTube and you can go through, you can search on our YouTube channel. If you want to search for covered calls, naked puts, so on and so forth as well, you can do that also. Of course, other questions, you can send us an email at any time to support@powerop.com, or of course to support@radioactivetrading.com. But you can send an email to either one. And of course, you can reach us at market hours at 302-992-7971. Trial members and subscribers, remember, you can schedule a free coaching session at any time. I apologize for that. There will be a webinar next week, December 11th as well. All right, Fernando, thank you for your question. Kipp says, thanks, Mike, for another session. Have a wonderful weekend. Thank you, Kipp. You do the same. And of course, thank you all for your questions.